Welcome back, everyone. We're going to talk about another great investment model. My guest host, once again, is Julie. How are you, Julie?
Good morning. Fine. Thank you, Seewing.
Really appreciate you coming on board. And today we are going to talk about the title will be the next new real estate asset class is built to rent. The acronym abbreviation is BTR, built to rent, BTR. Like I said, it's up and coming 2024 and beyond. And let me tell you why. As an investor, you need to pay attention because if you get into this investment model, you're gonna be very happy down the road. So institutional investors are spending billions of dollars on the build to rent asset class. Why? Because the housing market will be out of whack for many years. And build to rent model is the next best solution. Many of these massively successful investors see the build to rent deals as once in a generation opportunities. I know some people are thinking, oh, this kind of hype headline. We'll see. Just have an open mind and watch the rest of this presentation, and we will see whether this once in a generation opportunities is hype or not. Yeah, just have an open mind. That's all I ask of audience out there. So let me give you some great data stats. Investment volume has surged, averaging 2.4 billion annually in 2021 and 2022, a 250% increase over the previous 5 average, which is absolutely mind-blowing, considering that many institutional investors are going, quote, all in, end quote, on build-to-rent model. It wouldn't be beneficial to you to know why industry experts, including ourselves, are flocking to this blazing hot sector. A core driver of the rapid build-to-rent growth demand is the shaky U.S. housing market. According to a recent report from CBRE, the U.S. currently has a housing shortage of 3.1 million units. In addition, single-family home affordability has become nearly impossible for entire generations of Americans, with the cost of paying a monthly mortgage rising significantly over the cost of paying a monthly rent. Something you and I, Julie, have been talking about over the past few years on our
Right.
podcast, right?
Absolutely. 100%.
You know what I'm leading to. So anyway, this leaves a massive market of stable income Americans stuck somewhere in the middle. They cannot afford to own their home, but still require a home-like feel with the added amenities, a gap that BTR is designed to perfectly fill. Build to rent attracts a favorable demographic for investors. Millennials, now reaching prime ages for starting families, are driving strong demand for large rental units due to increasing unaffordability of home ownership. Additionally, empty nesters are seeking flexibility and ease of renting over owning or another significant source of demand. Julie, you and I talk about the past video we did several times in the past few months, in the past few years for that matter, that we have become a renter's nation. We are at a 40-year affordability low index. So there are many people, not just millennials, but all across demographics have to enter the rental pool because buying a home, hate to say this, the American dream is in jeopardy today.
It's hard. It's hard. Even just in California, these young people get out of college and it just costs so much. So many of them are just staying at home because they can't afford to move out.
Yep, that's right. That's right. Yeah, skyrocketing home prices and elevated mortgage rates in the past few years has really caused a lot of challenging situations out there, especially renters who cannot afford to buy a home. Yeah, not only that, Julie, our shifting work environments have also had a major influence on this demand. The change to remote work has increased the demand for more spacious living environments, which BTR communities offer with their single family home like characteristics. So BTR properties have demonstrated a robust rent growth, with the sector averaging nearly year-over-year rent increases. As investors, don't we want rental increases so we can get more cash flow for our income property? Of course, right?
Absolutely. Absolutely.
Yeah, that's the whole idea of investing in real estate is to ultimately 10 to 15-year time frame where we could have enough rent, cash flow, and passive income to live our financial freedom lives, right? This increased rate is well above pre-pandemic levels and continues to drive revenue growth for investors. The mom and pop investors can enter this BTR. We've been promoting this. I'll tell you more about it. Okay. The BTR stability is also one of the most attractive aspects to institutional investors. What institutional investors? They are hedge funds. They are corporate. They are large corporations. They are Wall Street. Okay. I know there's a lot of negativity around Wall Street who are trying to enter into Main Street, right? Wall Street and hedge funds, I've been tracking them. I've been doing this for a long time, for several decades, Julie. Ever since the last housing crash of 2008 and 2010, corporate and institutions, the Wall Street, we're talking about Blackstones of the world. We talk about invitation to rent. We talk about all these main Wall Street corporate landlords. They have billions of money and they are entering the single family home investment space throughout the Sun Belt,
Okay.
in the Western region and South and Southeast mainly. So they're building single family homes in all those robust markets that you and I have been talking about, like from the East Coast to the South to the West. We're talking North and South. We're talking about Charlotte and Raleigh, North Carolina. We talk about Atlanta, Georgia. We talk about a lot of places in Florida where those hedge funds, where those institutions and Wall Street, they are putting their big bucks into the try to get a piece of the pie of the single family home model. And also in Texas, in Austin, Houston, these hedge funds are buying in bulk because they have deep pockets. They have some experts that graduated from Harvard, MBA, MIT, and Stanford that understand the numbers. So the Wall Street, with this highly educated hedge funds, they know the numbers. Numbers work. They can make money buying up all new construction single family homes from the builders, including in the Western region. We're talking about in Las Vegas, in Phoenix, Arizona, in Boise, Idaho, in this robust, fast-growing marketplace. And there are a lot of complaints about the hedge funds that they stealing the percentage of homes otherwise would have been available for potential home buyers out there. But having said that, Julie, at least at the very, there's some misconception as well. People think the Wall Street hedge funds, they're trying to enter the BTR model, take away a large portion of the new construction, new houses to stock. But of course, not really true. I mean, the Wall Street and hedge funds and the BTR rent model, they only command around maybe 3% of the entire housing stock. So they're not.
It's not taking up a huge bulk, but I think it's significant in that when you think about hedge funders and institutional investors, for them, it's all about the numbers. So if they are putting their money into BTRs, then that's like a sign, that's like a clue where we should be following.
Yeah, come to think of it, Julie, as a matter of fact, here's mom and pop turnkey property investors like you and I and my investors that we are, we're buying. We should follow their coattail. That means the numbers, they have done the advanced research, these hedge funds. We need to follow their trends. We need to
absolutely.
We as a landlords need to follow what they're doing, and we need to participate. And we are participating. My network is participating to a limited extent. But I'll give you more details in remaining that we have. But if you can't beat them, you have to join them. So
there you go.
So as a turnkey, out-of-state, remote turnkey mom and pop investors, you and I and my network, we need to follow. We need to get a piece of the pie in this BTR built to rent model. We'll get more specific for the remainder of this podcast. BTR stability is also one of the most attractive aspects to institutional investors. BTR properties maintain low vacancy rates, often below 5% vacancy, indicating a strong and consistent demand. Even during economic fluctuations, BTR vacancies have remained tight compared to traditional multi-family properties.
Mhm.
Okay, so we're almost finished up. So everybody out there watching, so to be be patient. So these properties are often professionally managed with efficient leasing, maintenance, and community management operations, reducing operational risk and enhancing profitability. Further, they offer flexible exit strategies, including the option to continue operating as a rental communities or selling individual homes to owner-occupied home buyers. See, these great exit strategies by owning single-family homes, right? The multiple exit strategies, you can sell it if you want to regular home buyers, you owner-occupied, you can sell it to investors, you can sell it to institutions. So a lot of flexibility associated with owning single-family home using BTR model or not.
Right.
Yeah, and finally, this same pro forma that we've been talking about is all about live where you live and investing where the numbers make sense. Florida and Texas, yeah, we have BTR communities and this build to rent model that we have with the Southern Impression Homes, the Florida builder that my network have been working with for the past couple of years. You may not realize it, but we never really talk about BTR model. This is BTR model. All the email that you've been seeing into your email inbox, but whenever I talk about Florida, different locations in Ocala, in Jacksonville, in Palm Coast, in Port Charlotte, in Cape Coral, in Inverness, so all these areas are all BTR model concept that our investors have been purchasing for the past few years. So that's what they're getting. With great property management, everything turnkey, the things that we discussed. We're not going to go to the numbers. Everything's cash flow. You get the builders rate buy down, increasing your cash flow much better. Brand new construction, very low entry level prices. And so very hard to get entry level new construction at this low level.
Yeah, that's a great price. I was just looking at that price. That's an excellent price.
All the new construction property close by, and our Southern Impression Homes are managing my property in the central Florida, and everything's turnkey because like the property management portal, the online portal, I communicate through the online portal with that. I don't need to pick up a phone, talk to the property manager, because the online portal, they have technology is so great. I'm sure you're aware of that.
Yes.
These days, when I started investing 20 years ago, we don't have online portal. We don't have this technological efficiency, right? Oh, how far we have gone in the past 20 years. You have no idea. I don't mind spending a future podcast talking about the challenges that I faced when I started this in the early 2000s.
That would be very encouraging, I think, to people, because I mean, I can't even imagine having to do all these numbers by hand and figure out all this stuff. But that technology is amazing.
Oh yeah, look, the slides are just the last 4 slides. You just when somebody watches the video, they can just replay the last 4 slides and pause it. We talk about it oftentimes, but at the end of the day, we came a long way. I came a long way. The property manager 20 years ago, it was so bad. You couldn't communicate properly. Just so much miscommunication. With the power of the internet, power of the technology, the long distance passive risk investing, the concept created, it will shock you. 40 years ago, buying out of state, turnkey, almost passive, the things that we've been talking about, not just on this podcast, but all the podcasts we have done, you and I together, for the past few years, hasn't changed. Our business model hasn't changed. You just have to pivot onto the right market.
Interesting.
It's right, you with a good team. But nowadays, had I have my portfolio with the technology I have available when I started more than 20 years ago, my portfolio would be a lot greater because I didn't have the resources. Everything I did, like everything's new, like a new frontier 20 years ago. But now there's so much have changed, and it's the efficiency, the technology. So any investors, newbie, savvy, does not matter where you live in the country. You can do this model. You can scale your portfolio by multiple properties using the model, any kind of model. As long as you have the team on the ground that can have better everything for you. So, anyway, as we conclude, what are your thoughts about what's your takeaway from this particular podcast?
I think we've talked about the new build. The BTR is definitely a very viable option for people, especially newer investors, where if you don't want to deal with a lot of maintenance and all that stuff. But I think the bigger picture is what you were talking about just now, how streamlined the process is right now. I mean, we would have never been able to do what we were able to do. And I think people need to understand that we've actually never seen our properties. We know they're there because the rent checks come every month, but that is a huge advantage to be able to do this. And I don't think that people realize this. You don't have to fly back there. You don't have to fly to all the different states. You can certainly if you want to and if you have those resources.
Yep.
But technology made it easy. And like you said, I was in banking years and years ago, and everything had to be done by hand. All contracts, everything had to be done face to face. And now you can do it with a touch of a button. And it makes it, like we talked about earlier, it takes away the excuses. No more victim mentality. No reason not to do it. Anybody that has a computer or a cell phone can do it.
Well, Julie, do not quit your day job, but
Right.
you can become a professional, motivational public speaker. You have the mindset, you have the mentality, you have the skill set to venture into that. You're doing public speaking to your own community. I know that.
Absolutely. Yeah. Yeah. Yes. But it can be frightening, but I think you just have to move past the fear. Just do it afraid. Yeah. Do it afraid, because the benefits on the other side of the fear are just so much greater than staying in the fear and making a whole lot of victim excuses. Yeah. Just do it.
Said there's nothing else I need to add. You said a little powerful statement, powerful the mindset. Thank you so much. I really value you. And
Thank you.
People listening out there, Julie, you need to listen to Julie consistently, right? And she can inspire you and motivate you to do what's right for you in terms of
Absolutely.
Thank you so much, Julie. With that said, okay, as we leave you at this time, just if you see any value from this podcast, please like and subscribe and comment, enhance our YouTube video. And also, last but not least, put your email into my website below so you can become an email real estate insider free membership. Put your email on there, and every single day of the week, you will receive contents, video newsletters about all areas of real estate investing so you can impact your life, your family, and create generational wealth for people you care about. Thank you so much to the Seewing Yi and Julie. Thank you for attending. I see you guys.
Thank you for having me.
You bet. Thank you so much. Have a nice day. Bye-bye.
Bye-bye.